Nokia's Here map sells to European car makers, how dash buttons for Amazon Prime members work, Twitter stocks no good, very bad day, and more. It's Monday, August 3rd, and this is Crunch Report. Hello everyone, happy Monday! Nokia has agreed to sell its Here mapping business, which includes location technology patents, databases, and location attributes, to an auto consortium made up of Audi AG, BMW Group, and Daimler AG, that's Mercedes, for 2.8 billion euros, which is about $3.07 billion. Ever since Nokia completed the sale of its device business to Microsoft last year, the future of Here maps was uncertain, with rumors of a possible joint bid from Uber and Baidu. China's NavInfo was said to be interested, Amazon, Alibaba, Facebook, even Apple. Everybody was potentially interested in Here. What isn't clear now is what happens to Here's 6,454 staff members when the deal closes. That's a lot of people, considering that Here accounts for about 1/10 of the revenue that Nokia Networks accounts for. That's according to its latest financials. President Sean Fernbach says that following the acquisition, Here will become a, quote, much stronger company that will remain independent and neutral, or the Switzerland of maps. I like that. Reddit hit a new 8 billion page view record in July, despite a very rocky ride and a community meltdown of sorts over changing leadership policies. Reddit had already grown from 175 million unique visitors in May to 177 million in June, so it was growing. But July's drama bumped it up to 195 million monthly visitors, which is an 8.9x increase in its month-over-month growth rate. Now, there's still the danger that Redditors, hardcore ones, rabid Redditors, will leave the site after some of this hullabaloo dies down, so August numbers will probably be more telling in that regard, especially since Reddit's advertising model really depends on those users who hang out on Reddit all day, long periods of time. The company will also have to contend with lost revenue from its new policy not to earn money off of content that violates a common sense of decency. So last week we passed along Samsung's really not very good last quarter, particularly because of competitors like Chinese company Xiaomi making inroads in the Chinese market. The Chinese market is the world's largest for smartphones, so it's very important. Today, data from Canalys and Counterpoint Research show that Xiaomi was the top smartphone firm in China during Q2 of 2015. Now, Xiaomi is currently valued at $40 billion and took 15.9% of all shipments in China, which is obviously a lot. Apple was number one in China in the previous quarter, but this quarter fell to third place behind Huawei at second place with 15.7% of shipments. Now, if you're curious, Samsung and Vivo made up the fourth and fifth place spots. Xiaomi's Mi Note phablet and new $150 Redmi 2 were the top two devices sold in the quarter, according to Counterpoint. But overall, there's another trend happening. The Chinese market is slowly contracting following a dip in the previous quarter. Shipments fell by 2% year-on-year in Q2 of 2015, but did rise 4% quarter over quarter. Lots of talk lately about what Twitter has to do to stay relevant. Currently, Twitter has no permanent CEO in place. The user growth is not exactly delivering. In its earnings report last week, the company shared it gained 8 million monthly active users from the previous quarter. That is not a lot, especially if you compare it to something like Facebook. Today, things got kind of weird. Shares of Twitter fell drastically, 6% by midday trading, which put it below the $30 mark, which sets a new low for the company since it IPO'd. Little background, if you'd like. Twitter went public at $26 per share, enjoyed a huge value jump right out of the gate, 74% on day one. Crazy big. Then the company's value on a per-share basis got close to about the $70 mark. That was early in 2014. Then it fell back to just above 30, and it's basically been a bumpy ride ever since. Falling share prices can do a few bad things. Hurt employee morale, make employee retention harder, not to mention hiring, all of which can contribute to slower product growth and quality overall. Another note we pointed out in our article today, Twitter co-founder Ev Williams has sold $275,037,833 worth of his Twitter stock this year, which founders do, and God love them, but also tends to make other investors think again about what's really going on. If you're an Amazon Prime member, you now have access to Amazon Dash buttons, $5 physical hardware devices that you set up to be associated with a particular SKU or product on Amazon to easily reorder things that you buy a lot of. Maybe it's diapers, maybe it's toothpaste. If you're at my house, it's cat food, etc. But still, physical buttons, Amazon, how well do they work? TechCrunch's Sarah Perez tried it out over the weekend and walked us through it. So it's a little device that's attachable via a little hook or an adhesive on the back and comes with a setup guide to pair the button with your Amazon app on either iOS or Android. First, you connect your Wi-Fi network and you fiddle with your phone's volume because the dash button receives ultrasonic tones from your phone to finish setting up. Once you're paired, you get a little blue light on your button and you're good to go. So now what? Well, you put the button next to your phone, wait for the app to recognize it, and then choose which product you want associated with that particular dash. Here's where Amazon might lose a few folks though: pricing. For example, the same paper towels ordered through Walmart's app are a lot cheaper than what Amazon is quoting. But hey, it's convenient, and by default, the button won't place another order until the first order actually ships to cut down on mistakes or maybe button-happy children in your home. And that is the report for today. I'm Sarah Lane. Crunch Report airs Monday through Friday at 7 p.m. Eastern, 4 p.m. Pacific, right here on TechCrunch.com. See you tomorrow.